Hi there, and a very happy Eid to all of you, and hopefully you're doing well. And this is another video from me, Simply Stocks and Simply Finance. So that's the name that I have changed to. So from Simply Finance, today I bring to you five companies which are worth investigating, which are worth looking at, which are worth analyzing at from a 5 years perspective. If you want to invest into it, probably do your own analysis, and disclaimers do apply, but these companies look pretty decent at the levels that they are trading at. So we'll discuss about these five firms, and so we'll get started with it. Thanks a lot for all the support on Patreon, and thanks a lot for all the support on YouTube as well, and kindly do subscribe to my channel and hit the bell icon. And if you want to subscribe, you can subscribe to the paid you can say services as well on Patreon, etc. So we get things started now, and hopefully from now on there'll be more videos coming in, and I'm working on the course, and it's nearly ready. That I'll bring that up free of cost on YouTube from this weekend onwards. It is basically not something like that you'll probably have all the knowledge, and you'll be able to trade or invest into the market, but it's some kind of an you can say the whole journey that I have had over the last 10-12 years into the market, and whatever I have learned through it, I'll try to impart that to you through those weekend videos. So we'll do that as well. So let's get things going. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. I am not a member of NSE and BSE, and that I am not an authorized portfolio advisor. So whatever I discuss here is purely for educational purposes, entertainment purposes, and in order to make you understand whatever I have learned as a retail investor over the last 11-12 years. So any financial decisions that you take based on my videos, kindly take on your own behalf with your own analysis, and do consult your official portfolio advisor or financial advisor before taking any call on any of the companies that we discuss upon. So let's get things going. I'll take you to the Screener website, and there you'll be able to understand more as to which companies that I want you to probably look at. And so you can see here all the five companies that I have brought forward for this Eid for you. One is signed into the information technology domain, the IT sector, which is bashed up at the moment over the last 18 months. One is Bosch, which is into auto ancillary, and the top auto ancillary company, which is not talked about that much here in the equity parlance, but it is a gradual compounder. We all know about it, and over the next 4 or 5 years, we believe that this could end up being the hero rather than the smaller companies that we always talk about. One is from the real estate domain, and that is Prestige Estate. I'm going to go through each companies in details as to why I picked them. But I think real estate, once the interest rate cycle peaks out, is a no-brainer that one should get into gradually. And yes, it would seem that the prices have gone up a lot on these stocks, but it seems like this is the beginning, because over the last couple of years, the interest rates kept rising and rising big time globally. So I think this will be a shift here, and one of the better, you can say, real estate companies. Polycap, when we talk about real estate, when we talk about the fact that more houses are going to be sold, I think there'll be a direct impact on housing ancillary firms like Polycap, and the next one, Blue Star. On both these companies, there'll be a direct impact. This time around, the AC sales have not been that great, but we believe that going forward over the next 5 to 7 years, AC could be the next big thing. So we have known about how Indian diaspora and the demography of India has changed over a period of, you can say, last 30-40 years, by having radio, then television, then washing machines, and now sporadically we have air conditioners in some parts of India. I mean, the penetration is extremely less, but over the next 5 years it's going to be uh, even bigger with electrification for all and everything that is going on with the government. I think Blue Star having a market cap of around 15,000 crore could grow even more. So these are the five companies. So if you would have just wanted to know about five companies, which five companies I'm going to talk about for the next 5 years, these are the five. Those who want to know in detail about these, what I believe could be the returns, etc. Again, returns are very subjective in nature because the markets are at life highs. So kindly take that on note. Gradually get into these companies if you want to, and again, do consult your financial advisor before you do all this. So we'll talk about these five companies, but let me also just open up uh, the market, you can say, perspective, and let me just talk a little bit about the market because I have not made a particular, you can say, detailed video on markets for the last 2 3 weeks. I understand. So we are going to talk about Nifty as well as you can say uh, the Nifty and the small cap index in detail here. Plus, then we'll talk about these five companies as well. So, let me just give you an idea of the Nifty. So, let's begin by the Nifty thing. So, it's at all time high. 18,880 has been reached, and now we are at 19,200. We are going gung ho at the moment. I believe there could be some resistance around 19,400, 500, and then probably some sort of a decline. But overall, the market is in a bull run, and if you see the charts here, from 18,700 onwards, the move has been in one shot. If you look at the 3 months chart, then you'll have an understanding that this run up has come in from around, you can say, June onwards. I mean, right around 26th of June till now. The move has been tremendous over the last 4 or 5 days. I believe what can happen now is that the small and mid cap index could fire. All those companies in the, you can say, the defense domain, uh, engineering domain, and capital goods and all could start firing again because I think over the next 2 3 weeks Nifty could be range bound and mid and small cap could perform. So that's the understanding of the market overall at 19,200. If we say that in FY24 the earnings would be closer to 950 rupees, the markets do look stretch. There's no question about it. That on 1 year forward basis the market is trading at 20 times, but it could very well go to 21, 22 times. There's no doubt about it, and it could very well happen or it could reverse. So that is why people are talking of 21,000, because if you say 22 times 950, then it comes out to be around, you can say, 21,000 or so. So that is why 20,900. So that is why over the next 6 8 months, a majority believe that 21,000 is a possibility on the Nifty now that 18,800 has been reached. I am in the same bracket, but I feel we might go closer to 20,000 and then reverse. Psychologically speaking, 20,000 is a number in itself, and normally these numbers like 10,000, 20,000 is very hard to breach in one go. I remember when we hit 9,880, I think around December of 2015. So at that point of time also, we were pretty much at these, you can say, levels of you can say, we were meandering around those levels and we did not cross those levels. So again, I know that the screen wasn't working, so let me again take you to the Nifty. So if you can see here, what happened was at around 19,000, say from around 18,600, the move began around 26th of June and it has shot up to 19,100. So that is why I believe Nifty could trade in a range. My stocks remain the same, so we'll discuss about that. So signed Bosch, Prestige, Polycap, Blue Star, but I apologize for not having the screen when I was talking about it. I didn't realize that the screen was showing full screen of my face rather than the screen of website. So basically in Nifty we could just move around here. Mid and small cap we could perform over the next 2-3 weeks, and that is my understanding. July normally is pretty good, and so I feel that the mid and small cap index should perform going forward. So now let me just take you through one by one on these stocks. Let's just go through Scient. So Scient has done reasonably well. It's again closer to its all-time high, but the results have been good. So let me just straight away go to the results. I have discussed about the company in detail in many other videos as well, that they are mainly into infotech enterprises. It is you can say a multinational technology company that is focused on engineering, manufacturing, data analysis, and you can say networks and operations, and they have businesses all across the globe. They have a decent business in India as well, and that's why I picked this up, that not that their business is impacted big time from what is happening in US and Europe, because if you look at it, their business is also in in Asia Pacific, Australia, etc., and other parts of Asia, say Southeast Asia, etc., apart from US and Europe. So if you look at their numbers, in March of this year they did 1750 crores versus 1180 crores. That's a huge jump of around 50%, nearly 50% in here, 40-45%. If you look at if you look at operationally what they did, 212 crores versus 322 crores. Again, on the bottom line, although on the bottom line it doesn't show a lot, but you have to understand that if you look at the other income in the March quarter was negative 16 crores versus positive 49 crores last year. So you can add this up. 49 plus 16 is 65 crores. So this is a turnaround of around 65 crores, and that's why the numbers on the bottom line look the same. If you take that out, I think they would have shown a growth of 30% on the profits as well, on the net profits as well. Overall, on a yearly basis, let's even if we take so if we don't look at net profits because of the extraordinaries, but if we look at the sales, 6,000 crores of sales versus 4,500 crores of sales is a tremendous effort. That is a growth of, if I may calculate here, that is a firm growth of somewhere around 33%, where companies are showing, larger companies or large caps in the IT domain are showing growths of 8 to 10%. This is showing 33% growth, and that is why the stock is trading at 30 times earnings. The PE has expanded. So even if we take 30 times earnings and we take that there could be another year of 30% growth that would be coming in, because US will improve going forward. So in FY24 I will not be surprised to see an EPS that will be closer to somewhere around 21 rupees or so. So if we take 21 rupees as an EPS, and if we take 31 so FY 2024, I won't be surprised if we see an EPS which will be closer to 65 rupees. So if we take 65 rupees as an EPS and 31 as a you can say the PE, the stock is headed towards 2000. So 1 year target could be between 20 to 25% upside in this stock at least. 1800 to 1900 is a possibility on Scient over a 1 year period. Over a 5 year period, I will not be surprised if the stock more than doubles over this period, having a CAGR of more than 16-17%. So that's my understanding on Scient. If you look at the shareholding pattern as well, the balance sheet looks strong. Yes, there is a sense of borrowing that has gotten because they were doing expansion this year. I think this will come down going forward. And so if you look at the shareholding, then there's 23% that is with the promoter, 32% is 32.6% is the FII holding, which got reduced from the higher levels, but DIIs have also increased holding over a period of time from 21% to 25% nearly. Public shareholding is around 18%. It's in pretty strong hands. So you can't say that you have a situation where the stock is majorly owned by public. So major FII DIA holding is in the stock. The stock is around 16,000 crore market cap. I think sales will improve. Sales should continue to grow at 20-22%. So I will not be surprised if we see 7,500 crores, 7,300 crores next year sales. Based on that, three times sales would again be closer to 22,000 crores market cap. So that's about Scient. The next stock in my list is Bosch, a renowned auto ancillary play that is into all, you can say, products across the globe, a 56,000 crore market cap company, a larger stock per se, if you may say 19,000 rupees stock per stock, but this is worth looking at because this is a company that hasn't done a lot over the last, you can say, 6-8 months or so, since April. So 3-4 months. It was at around 19,500 in April, and in July, so after 3 months it's around 19,000. So I think there could be a major breakout that is awaiting us here. In terms of on the PE basis, trading around 39-40 times PE, which is not very expensive, not cheap either. But if you look at the numbers per se, they are decent. In the March quarter, they did 4,100 crores versus 3,300 crores last time around. So that is a good, you can say, growth of 20-23%. On the operating profit front, from 440 crores, they have grown to 520 crores. That's a 15-16% jump. Margins have remained stable in a very difficult environment with chip shortages, etc. I think margins are only going to improve with the chip shortage thing going away, and now microchips are available. And in fact, going forward over the next 5 years, I'm pretty confident that India will have their own chip manufacturing plants across India. So I think over the next 5 years, this is a company to look at. This is a sector to look at. This is the best company in this sector. And we have seen on the bottom line also, from 350 crores, they did around 400 crores. So that was a decent 12-13% growth on the bottom line. The problem here, I won't say the problem, but the thing is that the base is so big that the company can grow at 14-15%, but this is a 13-14% growth on the profit front that we will see very consistently compared to other auto ancillary companies, which may not grow consistently at a particular level. They might grow 30% 1 year and then degrow, etc. But this can, on the profit front, can grow 13-14%. On the sales front, they can grow at 18-20%. So a decent, you can say, compounder over the next 5 years. That's what I expect from Bosch. If you look at their balance sheet, let me just look at their balance sheet. Again, virtually no debt whatsoever, 50 crores of debt versus, you can say, reserves of around 11,000 crores. A huge dividend pay that the company is. Promoters hold 70%, more than 70% stake. There is a decent holding of FII and DIIs, around 17% with DIIs, 3.5% with FIIs. So very less retail investors invested because of the, you can say, high per se number, you can say, stock price of 19,000. This is something to look at from a 5 years perspective. Third in this list is Prestige Estate. Now you need to understand how things work out when you have a situation where interest rate cycle reverses, and which is it is going to reverse globally and in India as well. Probably from next year onwards we'll see interest rate cuts. This sector is going to benefit the most. Real estate and infrastructure sectors, all those sectors which are more, you can say, debt driven, which are more having high gestation periods, say capital goods, engineering, real estate, hotels, infrastructure, shipping, airlines, etc., they will all benefit. And that's why these companies have been doing well over the last 6 months, because people have, or large investors and informed investors do have an understanding that from here on in, you can say increase in real estate is a chance that is extremely less compared to interest rates going down. In that case, you have to look at sector like real estate, but in there you don't have to look at smaller players. Look at larger players, look at the best of the players that are performing and that should perform, and one of them is Prestige Estate at 23,000 crore market cap. uh, the stock has run up, there's no doubt about it, but there are reasons for that. The way the company has done in terms of sales in the Maharashtra region and in the western region. If you look at the March quarter numbers, 2600 crores of sales versus 2400 crores. But you look at the operating profit of 682 crores, then you'll understand that how margins have expanded. With, I think probably this is a quarter of recovery for the real estate industry, and I think things should only continue to become better as interest rates peak out and get less. So 500 crores of operating profit has become 680 crores, so that's a good 35% jump in profitability. Margins have expanded by 5%, 21% margin in March of 2022 versus 26% this time around. Even quarter on quarter, it's improving. A bottom line 500 crores that has come out versus 945 crores, but that is only because of the other income of 903 crores. So if you take out that, or probably take it as around say 30 crores of other income, then you minus 870 from 1100, because I'm taking 30 crores as other income. Then you end up having somewhere around, if I say 1100 minus 870, then you have a situation where profit before tax becomes 230 crores versus a profit before tax of around 620 crores. So that's the difference. Again, other income this time around was swelled up to 341 crores. Even if I delete that, then we have a situation, say we make it as 40 crores of other income this year, then you have profit before tax of around 320 crores versus 230 crores as I mentioned in March. So overall, uh, in a nutshell, the growth has been significant. At least you can say 30-35% on the profit front, 30-35% on the sales front. In terms of the balance sheet, you would expect a high amount of leverage in here, but I think leverage will only come down with interest rates going down, and that is where you can say operationally as well as on the bottom line numbers should improve. In terms of shareholding pattern, if you look at it, promoters hold 65% stake, which is very positive. FIIs have around 21% stake, and DIIs have kept on increasing stake from around 3 4 5% in 2021 to now nearly 11%, 10.5%. Public shareholding is extremely less, which is again a very positive thing, and that is why the stock, whenever it moves up, the liquidity is less. So it is with the strong hands, it goes down less, and I think it could consistently compound for you over 5 years without giving you jitters of 15 10 15% downside. Uh, Only in the case of very bad results that could happen, but over the next 4 5 years, can the stock can do well. Next in line is Polycap. Now, Polycap is interesting because it is slightly volatile. So whenever it goes up, it does show corrections. We have seen that happen. If you see here, correction from around 3000, it dropped to all the way to 2500. So there's a decent 15% correction. From here, I think from 3150, it corrected all the way to say 2780, again a 15% or so, 20% correction or so in March of 23. And then from this peak of around 3600, 3700, the stock has fallen all the way to 3400 and now is trying to stabilize around there. If you look at the numbers, there's no doubt numbers are very decent. 10%, yes, this time around growth hasn't been that great year on year, but it is in a recovery mode. From June 22, when it did 2700 crores of sales, the sales have continuously gone up and now is back to around 4300 crores. Margins are 14%. versus 12%. So again, 603 crores means that 22-23% operating profit growth. If you look at it here, in fact, it is pretty good. 476 has become 603, so that's a good 227 crores uh, of increase in profitability, which is a good 45% increase year on year. And on the bottom line, as we see, 426 crores of net profit, 428 crores of net profit versus 325 crores. So this was pretty good. The year also for the company was pretty strong, 85 rupees of EPS versus an EPS of say 61 rupees last year. I think the momentum should continue. Again, a stock that could go up 17-20% CAGR over the next 5 years. But this is a stock to buy in a very staggered manner, probably on major declines in the market, major declines, 10-12% decline from the top. If you find it, the stock keep on accumulating and should reward you in the long run. Finally, the stock that I want to discuss with you is Blue Star. It is a pretty interesting stock. The company is market leader in home AC and has been doing well, but the stock does well in phases. Now, why I have picked this up as a long term investment is because, and I have picked this up many times, is because of its consistent sales growth over the past, you can say, 10-11 years. So from 2800 crores, say a little bit of growth of to 2900, then 31, 3200, then to 37, 3800 here, then 4400, 4600, 5200, 5400 even in the just before the pandemic year. And it's back to its mojo with 6000 crores and now 8000 crores. So it may dip this year, and that is why the stock has not performed that well, because there is a belief that June quarter, so the June quarter will not be good, and that is what the Blue Star management has come out with. I think there could be a 20%, 15% degrowth, but I feel that after this year, things should look up, and so the stock should start recovering. So this is the time to start accumulating, probably on a monthly basis over the next, you can say 6-8 months. Keep on accumulating at these levels on declines over the next 8 months, and from next year onwards, for 4 years, they should do extremely well. So you'll get a very good average price, and in the end, again, a definite 5 year compounder because of the electrification thing that is going on, and the renovation, home renovation, a home building schemes, and that all the real estate phase that is going to come up because of the interest rate cycle reversing. I think all these home improvement space should do well, so Blue Star should benefit. So this was a video on five of the picks on this Eid for you from a 5 year perspective. Kindly do subscribe to my channel and hit the bell icon so you get my video straight away when I post it. And can you support me on Patreon if you want to become a member there? Join there, or you can message me on WhatsApp, or you can become a member on YouTube as well. Thank you.